Oh, right now the rates are pathetic. Today's topic, let's talk about three things that you must know about investing as a young adult. So, Casper, maybe inviting you to share a bit on what do you think are these three key things.
I think the first thing you must know is how much you should allocate to invest when
Mm-hmm.
you get your first paycheck.
Mm-hmm.
Yeah, so according to the 50-30-20 rule, right, it says that 50% are for your needs, 30% are for your wants, and 20% is for your savings.
Mm-hmm.
But as a young adult, I feel that you can actually do more than that. Maybe cut back a bit on your wants and invest more when you're younger.
I think 20% let that be a base benchmark, correct? So more than
Yes.
20% will be desirable.
Yes, correct. But another thing to note is we should have a cushion before we start investing. So maybe a
Mm.
pot of savings before we start putting money into the markets.
So you're saying emergency cash.
Yes, correct. If you were to get unemployed in the coming months, you still have some money to tide at least
Mm-hmm.
3 to 6 months.
Mm-hmm. I think young
Yes.
working adults, maybe 3 months. 3 months would be suitable because finding a job as a young working adult, not as difficult as someone in the 50s and 60s, correct?
Yes, correct.
So if income is say 2,000, so three or rather expensive is $2,000, then
Mm.
3 months of it 6,000 as cash in the bank accounts. Then the rest you should be actively looking for ideas.
Yes, agree.
When it comes to deploying, I think a second point is there are safe investments, there are risky investments, correct?
Yes.
So safe investments, they are like endowment plans, they are like fixed deposits, they are even like plans with interest, like Sing Life has something like that that has no lock in and yet gives you 1%, 2%, something like that. So
Mm.
these are safe investments, including Singapore savings bond.
Right now, the rates are at around what percentage? Do you know?
Oh, right now the rates are pathetic. 0.4 thereabouts for 1 year, 2 year time frame.
Oh.
But again, it's better than keeping in the bank account. At least
Mm.
it keeps the money is growing. You're looking out for ideas. That's a key thing to focus on also. And they're also riskier investments. So have some that is safer and some that are riskier. Stocks are riskier, cryptos are riskier, peer-to-peer lending are riskier. There's so many instruments out there in the market.
So, do you think as a young adult we should be more aggressive or stick to a mutual fund
Um, for this point, perhaps there's no one size fits
right
all.
around? Yes,
Yeah, there's no
correct.
one size fits all. As always, if you're unsure, look to find out more first. Look for an advisor. Get the right people telling you the right things. If not, get tag on to someone who you know is good at it.
Maybe we can watch The Astute Parent on YouTube. That's a great idea.
Can watch our channel. Can watch our channel on
Yes,
YouTube. We have some content on beginner
I think
investing.
yes, I think our stock breakdowns are quite in depth and like we give try to always give two sides of the
Yes,
story.
exactly.
Mm.
So that leads to a third point, which probably I think is also good to bring up. That as a young working adult, you are going to see a lot of investment ideas from advertisements thrown at you, correct? You've seen some, right? Guess.
Yes, correct. Like options trading, all those enticing
Mm-hmm.
500% rewards kind of ads.
Yes, yes.
Yeah.
These ads target anyone who is keen to grow money quickly. And very often they kind of don't tell you the real picture of the risk, the time needed to do it, and results are not guaranteed.
Mm.
Correct. So any friends have joined before on your side that you can share an experience or two?
Not. I don't have any friends who actually paid money, but I have friends who are learning.
Hmm.
I think got some free courses online that they actually
They try to
started.
self learn.
Yeah, correct.
Okay. I actually had friends who many years ago when I was much younger, of course, they actually went for courses, paid
Mm.
courses, very expensive, very reputable people. Probably I'll not leave names here. But what happened is, they were suggested to use demo accounts, start learning the trading techniques, and that got them excited. But fast forward 1 2 years after that, or then no mention really. They kind of given up on it already. So money spent on the course, and yet the follow-up part, the results part is always something very left to be desired in a lot of ways.
I think it's also good to note that it's actually very hard to outperform the market, right? On a consistent basis, unless you're super experienced.
Yes, you need time. You need time to build experience also. Correct. So you're gonna hear friends that brag about their stock buys, their crypto buys, but then they don't tell you when they lose. And then the time frame is also very narrow. Like you only have this 1 year experience, which does not show a full market cycle ups and downs.
Thank you for being a listener. Click on the follow and we'll see you in a future episode.